I start with my introduction, my name. Then, it's the topic for today. It's accounting. Sometimes this thing is called accounting cycle, and sometimes it's called collecting data. So we are collecting data from source documents, you say, into the accounting system before you can process it. Now, you saw yesterday, we were dealing with paid wages once a month, purchase stationery once a month. So real businesses don't operate like that. Maybe a stationery will be bought 5 times or 10 times per month. Purchases will be 100 times, even bigger organization, 10,000 times. Now, how do you then debit, bank, and credit, and maybe purchases or rent or whatever that you have to do? How do you do that in ledgers? Because then it's plenty transactions. So then it means you have to analyze it first and add it together. You see, it was for demonstration yesterday that you will take one transaction, we put it in the accounting cycle, we debit it, we create a trial balance. Those are not like real, this is very small businesses, very, very small. So real businesses got bulk transaction. So now that's why now there is this chapter which says collecting and processing data, meaning you have to, that data, you have to, just have to open here. Yeah. That data, you have to collect it and process it. You see, this is the question for today, revision exercise 11. So we have to collect that data and process it. Okay. So that's why we are having this chapter, and that's what we'll be doing. And also we will be dealing with VAT. There, yeah, we will be also dealing with VAT. As you can see, there are many transactions. And also, I just want to explain to you before I forget. You see here on the required, there are many journals. So it means all your raw data, you have to categorize it. Whether it's a cash payment, you batch it together. A cash receipt, you batch it together. Sales journal, together. And all like that. So, yeah. So in fact, what is a journal? So a journal, it's like a spreadsheet. You see, it's not necessarily part of the accounting system, but that's where you write everything, you summarize it before you batch it together, before it then gets posted. Something that is really, really an accounting system, in the accounting system, it's in debit and credit. Here you are not yet debiting, you are just summarizing things. So that's what journals are, putting things together. Because then, can you imagine, you're going to have 10,000 transactions per month, and they get as much as that, for an example. You find that there are even 20,000 transactions per month in a business. So how are you gonna debit and credit? It's gonna be clumsy. So you summarize, and then you make totals for the month, then you post to the ledger accounts. The same way we were posting, but you would have summarized. Now, what we are starting with, we are starting with what we are starting with, we are starting with, yeah. So what we are starting with the VAT cycle. Then once I've done that value added tax, then I'll open for questions. So then, but you'll see if you've got questions now, you see if they're not answered. If they are not answered at the end, then you will ask them afterwards. Let me take you through to the VAT cycle. So So before 1991, there was the general sales tax, which was 15% charged on the final consumer. So it used to be called GST, general sales tax. So that just that background so that you can understand the source of value-added tax. Now, what will happen is if you go to a shopping center, like to a retail store, it was charged only by retailers. Manufacturers, producers were not charging it. So, in fact, that general sales tax was collecting that sales tax from the final consumer, an entire 15% from the final consumer. If you are a business, you know that you deal with the final consumer, you will charge that whole 15%. The question became as to what happens if the retailer squanders that whole 15%. You see, because they collect it from you, you are the final consumer, they pay it over to SARS. Then now, in fact, it's countries around the world introduced value-added tax. So at every value chain, SARS should collect is 15%. Maybe starting from a raw material producer. Number one, which is a raw material. Producer. Number two, I'm writing raw material twice. Number two, a manufacturer of the product. Three, a wholesaler. And then four, a retailer. So for simplicity, the raw material producer will charge 15% and claim it. Same thing with the manufacturer, wholesaler, and the retailer. All they will charge their 15% and claim it. The person who will end up paying 15% and not claim is the final consumer. It could be me and you who won't claim it. So it means ultimately we are the ones who are paying VAT. You see, because others they pay and claim, they pay and claim. The way they claim, they reduce what they have to pay over to SARS with this 15%. So that if, for an example, in this value chain, the manufacturer squanders the VAT, the VAT, SARS don't lose everything. So it's not all or nothing. Because if it was only collected here, then it means SARS was going to lose everything. So the VAT, in fact, the reason that this thing is a VAT is paid at different stages is an admin exercise to prevent the fraud of VAT. Because I think even now there are still instances of businesses that collect VAT but they don't pay over to SARS. But that's something else. So, but I'm trying to explain that that's why we had something that was called VAT. So now, Here it is then. Let's read an exercise then. You can answer it in your chats if you can. ABC Carpenters Ltd. bought planks of wood from heavy forest costing 5,750. ABC Carpenters converted planks of wood into a dining room suite and sold it to XYZ Furnitures for 12,650. On 25 September 2023, Mr. Ch bought a dining suit from XYZ Furnitures at a cost of 21,250. Both ABC Carpenters and XYZ Furnitures are VAT vendors. Now, can you then calculate how much VAT is going to be charged by ABC? Output VAT that's going to be charged by XYZ Furnitures. So the output VAT is what the business pays over to SARS. So it's going to be, how much is the amount? 21,275. You can answer if you can as well on your side. We will compare if you are right. Times 15 over 115. This 15 over 115 is that this 21,275 is already exclusive of VAT. Then what do you get there? You get, I'll open for questions. If you've got questions after this, 2,775 output VAT. This is what they will be owing SARS, that they should pay to SARS regarding this customer. Then, but they've paid. You see here, ABC Carpenters, they sold to XYZ at 12,650, including VAT. They paid VAT themselves. So they'll have to reduce with their VAT, which is input VAT. How much is what they bought it for? So 12650. So times 15 over 115. That's because it's inclusive of VAT. The whole DB. And also, it's a law that products are displayed inclusive of VAT. You see, so that's why when you get to the till or you are buying furniture, you won't get a product which is costing 10,000. Then after that, when you get to the till, they say, oh, but you still have to add VAT. No, it has to be included. It's a law that on display, the product should be inclusive of VAT. And if you calculate that, it means they must claim 1650. So that's why they will reduce what they will pay over to SARS. So it's not that which they paid to ABC Carpenters when they were buying. So they'll reduce what they've paid to SARS. They'll pay to ABC Carpenters when they now have to pay this money they collected from you as a customer to SARS. And then the net output VAT to SARS is going to be 1125. Then if there is a question, then we will deal with that question then before we do the final leg of this transaction. So therefore, do you think is there any question there?
There are no questions as yet, Mr. Kanyes.
Okay, let's move on now. Then it's the same thing now for ABC Carpenters who bought now. Yeah, who charged XYZ Furnitures 12650. It's the same thing. Then it means they will only account for it's 1250 times 115. It's going to be 1650. So they'll have to pay over the two SARS, but they'll reduce with what they paid themselves when they were buying from forest. Remember when they were buying from forest, they paid 5750. Then, so did the VAT for that, which is minus 750. Then the net output for APC carpenters is going to be 900. So this was just for one transaction. But you see, like they say, even it's a furniture shop, there'll be a lot of furnitures that they would have sold. So they'll batch them together and sell and send it to SARS. But I was explaining the cycle using one transaction so that you know when you see a VAT input and a VAT output in the in your accounting records, to say no, this is what they are paying to SARS, but you are batching it, and then this is what they are claiming reducing with, and we are batching it. Now, before I move on then to the question itself for today, if there is a question, then you will stop me, Zafo. So let's work from that. Yeah, let's work from that. So that, yeah, if there is a question, then you just tell me, and then I'll stop, and then I will look at that question. So this is now the VAT cycle. Now,
Mr. Kanyeza, can you hear me?
yes.
My apologies for interjecting. I have a question for Mona Lisa. So she's asking if you can just please re-explain the whole paying back to SARS process.
Paying back to SARS. Okay, Mona Lisa, when you buy a can of Coke from when you buy a can of Coke from a store, you'll see there, they even calculate it for you. This is how much output VAT that you are paying. That can of Coke, a retailer bought it somewhere at a lower price. You see? So yeah, that can of Coke, a retailer bought it somewhere from Coca-Cola at a lower price. So that VAT that they bought with, that VAT that they paid when they bought with, they came it back from SARS. So you are the final consumer. You don't claim anything because you consume what you buy. You see, if you are selling, you are gonna claim from somebody that you charged. You see, so yeah, sometimes maybe when you digest it, but there is as best as I can explain it, because now this time I'm explaining it from a consumer backward. Students didn't understand more when I'm explaining it from a manufacturer to consumer. So, but then you will reflect. But the VAT that you are paying when you buy a can of Coke, a retailer will pay it over to SARS. But himself, he paid VAT. So you have to reduce. The claiming is that he reduces it. You see, it's the same as he said, SARS paid that to me. But the person who actually pay that, it's you, Mona Lisa, because you don't claim it somewhere. You consume what you buy. But if you resell, then you claim what you. That's why I was saying here, just to lastly explain this. That's why I was saying that in every chain, that's why the VAT itself is called, it's a value added. So this is a value chain. A manufacturer adds value and sell. He buys, he pays that, and he claims his. A wholesaler adds value and sell. But he would have paid VAT from a retailer. You see, yeah. So then you must take time to reflect on that. So then now, let's then look at today's question. So here you are required to pay the cash to prepare the cash receipts, cash payment journal. All these are spreadsheets, sales journal, purchases journal. These are for These are for the sales channel are for credit sales, and these are for credit purchases. Just want to see, because I remember I used to Yakult, put in a sticky note here. These are for credit sales. Then these are for credit purchases. So once you've printed, if you've got this, and this is better to write these things so that you don't have to think about them. Cash receipts and cash payment is for cash transactions, yeah. Cash receipts transaction. Yeah, it's for cash payment transaction. The moment they say bank, by cash, by what, then you know that cash payment transaction. And then the sales return is obvious, purchases return. You see here, these are sales, credit sales, credit purchases. Then I want to deal with all other credit purchases, general. All other credit purchases. Or adjustments. So this really forms, because there you debit straight here on the general. It forms part of the accounting records, this general. So this, in fact, even though it's just your Excel spreadsheet, this sales journal and purchases journal and all like that. So right at the moment, we have to analyze transaction to say this transaction goes what. So here we have the analysis column, bank, sales, VAT, output, trade, receivables, and all. It goes on and on. Then we will then read these transactions and analyze them properly. I believe this exercise, we will do it over 2 days so that you can understand it, because accounting, it works with basics. Everything builds on top of another in accounting. Right now, we are doing a cash payment journal and a cash receipts journal. Now, when you will do a bank reconciliation, the cash payment and the cash receipts and a bank ledger part of the bank reconciliation will be very easy for you, because you've already done something like that. It won't be the first time. You see, I remember, when I was a student, we started with a bank reconciliation, done a cash payment, any ledger, debit, haven't dealt with debits and credit. So the moment there were debiting and credit, I would just get so confused, you see. So what I'm trying to say is that now when you move forward, it will be something that you've already seen before. It won't be something new. Let me then open this cash receipts and a cash payment journal. So let's see. This is a cash receipts and a cash payment journal. Just want to see. Yeah, it's the right one. So you've got this. This is exercise 711. Is it 511? So I'm gonna share. I'm gonna like share the screen and have I'm going to share the screen and have so you've got these. It's just that I've shown you that where we'll be reading from so that we can have somewhere where we are taking these things from. So there at the top, this is so that you can see. So we are analyzing these transactions. Let's have to get this right. So this is where we are reading from. So we start with the first. Please, I just want to make some few changes there so that you can some few changes to the question on day number 6 here, where it says it was purchased on a credit card. In fact, it was purchased on credit, not on a credit card. So this was purchased on credit. So I've changed it. And also, yeah, also on day number 12, this was goods return, was issued for goods return, not for an overcharge. So we have some discrepancies there on the study material. So let's start then with the analysis of transaction. I've shown you where is this transaction is exercise is it 11, 5.11. This is exercise 5.11. Now, so that you can be able to follow, I'll show only what we are dealing with. February 1, the owner as Shine made a direct payment into the bank account. So we've opened all columns. We have opened all columns. So now we have to decide where does this go. So everything goes to, so yeah, so then let's recognize this transaction. This is a cash receipts journal. Shine made a direct deposit on 1 December, on where is it, 1 January, 1 February 20.1. So the details, that's why we have a spreadsheet so that we have that's why you have a spreadsheet so that you can capture all details. I remember when you audit, you say maybe they say go and ask a bank. They say go and ask a bank ledger. They will give you a cash receipt and a cash payment because cash receipt and cash payment they all goes to the bank ledger. You see, but it's just that it's total, so we have to split it first. So now here they say direct payment to the. Remember they say bank, so it means this is a cash transaction. So we have to write this 15,000. Then do we have a column for this was capital? Remember, it's even saying a capital contribution. Do we have capital here on top? No, we have. So we will write it on the sundry account. So sundry account is just those non-routine transactions, like sales are routine, wages are routine. They'll have their columns. So what is the detail? What is the name of the account? Capital. You see. Then also on that same one, made an EFT. See the one that say made an EFT, it means they are paying. So here the bank received and now they are paying. If they are paying, does it go to the cash receipts? No, it's money. It's money that they have paid. You see, when they are making an EFT, because it's a business that is now making an EFT, which means it has to go to the cash payment journal. That's 3105. So, what are the details? It's a city council. The city council, how much did they pay? It's 3105. So, how much was the VAT amount there? Let me calculate the VAT amount. So, we said 3, you see now I'm on top here. This is where I am now. So that you can see, calculating the VAT amount now. So, this step now it's 3105 times 15 over 115. See, and then it means how much is VAT? It's 405. This is VAT. That I was showing you how to calculate. How much is the net of VAT? So I'll be slow a little bit as we are starting so that you can catch. And now, with the net of VAT, you can either say 3, I'll use the easy route first. 105 minus this one, it's 450. It's 405. So I'm talking and while I'm writing, so I did realize it's 405 minus 405. Then you're gonna get 2,700. If you've got a question, that's if you've got a question, you can ask the question. So the net of VAT is gonna be 2,700. So now it means the VAT is gonna be 405, which is it an input or an output VAT? It's an input VAT because this is what the business paid. As I was showing you earlier. 405, this is that 405. The net of VAT, this is the net of VAT. It's gonna be, how much is gonna be? 2,700. Then what is the details? Which account is this are we dealing with? And electricity. Water and electricity. We are in this transaction of City of Tshwane. We are moving to the next transaction. Purchased merchandise from Glasgow Limited and paid by an EFT. So the details, because these things, so businesses they capture to say we bought from who like this, so that when there are queries, they can know. They say, when you go and return things, it's a retail shop, but that things are computerized. They are able to see that, no, you really bought from here. So that's why they capture these details. But now they capture the things they are captured with a scan. So, yeah, the details, it's so the name of the people that were bought from, it's Glasgow Limited. As you can see here, Glasgow Limited. So These are LTD. Now, we check first, do we have an account for this? Do we have an account for this? Of services? Yeah, we do. Yeah, we've got an account for. Oh, let's start with everything. In a bank, VAT is not split. I know that it sometimes confuses students to say, should I split VAT? No, in a bank account, VAT is not split because banks do not cannot separate whether it's this money for VAT. Businesses separate VAT in their books, you see, so that you can be able to know. So just so that you can move fast, I'll just replace here with the amount. 885, then how much is the VAT for it? For the same calculation, VAT for it is going to be 1155. And then this VAT, going to minus it, 1155. So then how much is this amount? It's 8855. So if you have this 8855, so in fact you're going to have, I think it's going to be 7,700. 7,700. The net of VAT. I hope you can still follow. I just changed the amount because I can't keep on starting the same calculation. It's going to be clumsy sometimes. If you say you are writing in a revenue exam, you write down all these calculation. So maybe the VAT, input VAT is gonna be 115. The amount, the net of VAT gonna be, the net of VAT is gonna be, the net of VAT is gonna be 7,700. That is the net of VAT. So we were on DASCO. They paid within an EFT directly. Purchase merchandise on credit from Ferguson Limited. Now things are starting to change. We are now purchasing on credit. Do we put this in the cash payment journal? No, because these are payment. Do we put this in the cash receipts journal? No. So it means it goes to the purchases journal. This purchase on credit. It means it goes to the purchases journal. Credit purchase. So also the balances do not split VAT. So the balance is going to be 9,200. Again, I will then say 9,200 times 15 over 115. It's going to be equal to 1,200. So that is the VAT. So the VAT input is going to be 1,200. Then if you wanna, then you have to determine the net of VAT, the output. The net is gonna be 9,200 minus 1,200. So it means the purchases account is gonna be 8,000. So now why is this split? This is the actual cost to the company because the company is still going to recover this 1,200. Then now, you are still on this 9,200. So we are summarizing this transaction. Sold inventory on credit to J. Jason. J. Jason, let me put in name of this business here. This business was Ferguson Limited. See here, Ferguson Limited. So Ferguson Limited. This Ferguson Limited, yeah, it's 9,000. Okay, yeah. Now we on the same day, the 3rd, sold. This is where we are at now. We're on top. See, this is where we are. Sold trading inventory on credit to Jason, which is 13,800. Maybe, I don't know, maybe, yeah, after this, if there is a question, then I'll have to pause. If you can put in your question, I'll open for question. But that's if you've got a question uh, before we continue, rather than maybe, yeah, continue maybe one, let's say it's something that's, could be confusing you, but maybe let's say you have a question. Okay, let's see. Sold on credit. So does this go to the uh, does this go to the cash payment? No, it's on credit. Cash payment, as the word suggests, is cash receipt. Something doesn't go for cash. So it has to go to this spreadsheet of the sales journal. So for sales, which is for credit sales. The sales journal is for credit. The purchases journal is for credit purchases. Then, yeah. So, how much? Who was the person? How much? Who was this person? It's Jason. It's Jason. It's Jason, which is yeah, it's Jason. How much was it? It's 13,800. So it's 13,800. So it's 13,800 times 1.5 over 115. So that's going to give us the VAT of, it's going to give us the VAT of 1,800. So the balance is, I just want to write this thing for you so that because sometimes you get confused just whether there's split VAT on the balances. The balances do not split VAT at whatever stage. Whether it's a bank balance, it's so the balance sheet item do not split VAT. It goes as it is. So yeah, it's gonna be 13,800. And then we've just split this VAT here, which is an output VAT, 1,800. And then the net sales, this is what belongs to them. The net sales is gonna be because they were collecting from SARS minus 1,800. So in fact, in actual fact, they are said it's 12,000. So this they are collecting for the third party event. Then we move on. I just wanna go push until we go to something that's different. Then that's when, if there is a question, then I will open. But in any case, Tafo will tell me if there is a question. So I won't stop. Then now we are moving to the 5th. Purchased a desk on credit. I want you to digest this now. Now, this is a desk, it's purchased on credit. Let's start here. Does it go to the cash payment journal, receipts journal? No, no money was received. Does it go to the cash payment journal? No, this thing was purchased on credit. Then we move on. Does it go to the sales journal? No, this is not a sale, it's a purchase. Then does it go to the purchases journal? No, again, purchases it's for credit purchases, which is maybe stock, like stock. You see, so furniture is not stock. I'm not sure what are they selling here, but furniture is not stock. Maybe they are selling glassware. Furniture is not stock. So where does this go then? it goes to the general. That's where it goes. This that they purchased on credit. Yeah, it's more like straight now. It's in debits now and credits. So let's record this purchase then. So now remember we always, that's why I was saying that I was showing you the accounting equation, which says asset is equal to liabilities plus owner's equity. That's why we were, and our assets being on the debit side. Liabilities being on the credit side. I have to change now to I have to change to I have to switch because I'm just remembering that I think I'm gonna have a power cut. So just have to change to just a minute. Sorry, I was just preparing for load shedding because I see it might start anytime now, so that we don't get disrupted. Change. So now, remember I said we debit assets and then we credit liabilities. So we debit assets where they are and then we credit owner's equity. So here is the transaction. Purchase the desk on credit. What increased? It's asset. There is now a desk in a business. So we're gonna debit furniture. With so also we'll have to split the VAT here. So how much was this thing for? It was 3565. So you're gonna have 3565 times 15 over 115. So it means our VAT was 465. The net of VAT is gonna be 3565 minus 465, which is gonna be 3,100. Now, our furniture, it's gonna be based on the net of VAT, 3,100. If you've got a question, you can drop it, but if you don't, then we will continue. So we will debit an asset. You see, we debit asset. We've got an asset, we are debiting it. What are we gonna credit? Oh, also we have to debit the VAT input. Why are we debiting the VAT input of this 465? It's because it's an asset to us, because it's the money that the business paid for VAT, but it's still going to claim. So it's an asset. Still gonna reduce. Yeah, claim it at SARS, 465. Then what do we credit? This asset, it increased, this increased asset, did it reduce any asset? Was it for cash? If it was for cash, we would have reduced cash. So we're not going to credit bank. So in fact, it increased liabilities. Liabilities are on the credit side, it's already there. Then we're going to trade payables account. Or city finishers. City finishers with how much? It's the total amount. 3,565. So that's how
Okay,
now. So
sorry. Uh,
yes,
sorry for interjecting. Mike, sorry. So Mona Lisa was asking is why are you putting J. Jason on the sales journal when it's sold on credit? And then also Linda Good is asking, is net of VAT the same as of VAT the same as VAT exclusive, or VAT the same as VAT exclusive amount?
sorry. Jason, this is just this is a sales
But I
journal.
think you did touch base on that one. Yes.
Yeah, let me see. So it's because it was because it was sold on credit. So I can't. This is a sales journal is for credit sales. Can you repeat the question for Mona Lisa? So that I can see if I understand it properly. What is she saying?
Why are you putting Jason on the sales journal when it was sold on credit?
Yes, that's because the sales journal is for credit sales. So it's a spreadsheet for credit sales. Because otherwise, we can't put it on a cash payment. Was not for cash. You can't put it, yeah, it's not even a receipt. Then we can't put it anywhere. This is a general journal, you see. So we can't, general journal is for non-routine credit transaction.
All right, thanks. Sir. And then the other
Yeah,
question was from Lindo Goucher. It's about the net of VAR the same as VAT exclusive amount. I'm not sure if the VAR is in like VAR.
Val, or is it the name of a person, or what are we talking about now? Is it,
Maybe it can net of VAT.
oh yeah, maybe let's say
So
maybe
it
there is somewhere I mistyped. Okay, so
yeah,
now the
so
net
it's
of VAT, it's a VAT exclusive amount. You see, so net of VAT, it's net of VAT. Yeah, it's also VAT exclusive. If just that maybe I don't know if you've got your wallet closed, you've got a slip, a receipt. You can just check there. They split it for you to say this is the total price. This is how much you paid. This is what is VAT exclusive, and then the VAT exclusive amount is equal to 8,000. So yeah, VAT exclusive and net of VAT, net are the same thing, right? So then I think that was all. Then shall we continue? Zeko?
just all in a bit for me. Yes, no, the other one was it's from Patisiwe. Will the okay, never mind. I'll answer that one. It's an
Oh,
admin type of question. That's okay.
okay.
Thanks. So you may
Yeah, now
continue.
Yeah. Now, yeah. Now, now, now we are on 4. So that's why you have to separate. Once again, this is because now it's a non-routine. The furniture it's non-routine. You see, you have to separate these things. In fact, you see, whereas when it's purchases, which is routine transactions, then it goes to the purchases journal or sales journal or something like that. So we are done now with number 4, with day number 4. So now we are moving to day number 6. There, in fact, we bought on credit from Pencil. I know in the study guide, it says it's a credit card. So it's just going to be complicated if it's a credit card. So, yeah. So, in fact, it's from, it's pen and pencil. Yeah. It's pen and pencil they bought on credit. Then, they purchased receipt books, which is you have to now interpret what are receipt books. Receipt books are stationary on 230. Then let's see where does it go. They purchased it on credit. Does it go to cash payment? No. To cash receipts? No, no money was received. Does it go to cash payment? No, there is nothing that says cash. It says on credit. Then, so it means it goes to the general again. So yeah, I'll replace the figures just for simplicity. So for the VAT, it's gonna be how much is it? It's 230, and times 15 over 115, which will give us 80, I think. Then the net of VAT, which is the other student said it's VAT exclusive. Depends how you wanna call it. 230 minus 30 gonna be 200. 200. So let's do the journals then. So the first one, if we pay, there it is, on credit. Remember, it's back to the accounting equation again. Debit assets. Is this payment for a stationery an asset? No, not an asset yet. It's an expense. Credit. So it means if it's an expense, it's a reduction on the owner's wealth. So we're gonna have to debit. Remember, that's why I'm saying everything builds up. Because now you can imagine when we're doing the owner's equity, that owner's equity includes income and expenditure as well as the owner's investment. So now, then that's where we wanna have it as stationary. That's when we're gonna have it as stationary. It's an expense, a reduction in the owner's wealth. Yeah. So it's a reduction in the owner's wealth of 200. So it has been stripped of VAT. So because this is just an expense. This furniture is an asset. This is an asset. If you've got some money that you can claim, it's an asset to you. So that's why this VAT input that they will claim from SARS is an asset. So I just want so that you know. Then this trade payable is a liability, so you'll know. So that you know. So then and then with VAT input. Because they pay this VAT input when they're buying, but they'll claim it back from SARS. Asset. Because it will be converted into a, yeah, they will be able to recover it, which is dead. And then bank. So these are trade payables, which is, what is the name of the company? It's just a check. That's the name. The stationery shop. It's just want to check now. It's pen and pencil. Pencil. Then we move on to, we were on 8, 6, which was on 6. Then draw cash to pay weekly wages, 954. So the moment they withdraw, so it's a payment. You see, and also maybe you'll see, even in your bank accounts, it separates the payments and the receipts. Sometimes it does it as a negative or a plus or something. So yeah, it's through cash to pay wages. So it's gonna go to the on the cash payment journal. So yeah, it shows because when you draw cash, doesn't say it's for hard. So cash is gonna be 954. 954. Does wages have VAT? No, they don't have VAT. We have a column for wages here. We've got a column for wages. 9. And then yeah, we don't have anything in the under sundry. That's it. Then again, made an EFT account to Glasgow to pay the account. So now, made an EFT. Let's see something. Just want to see something. This was, so Glasgow, it means there are 2 purchases from Glasgow because here is this credit purchase and there is another. I just want to see on the purchases journal. Is that what? That's journal. Just want to see something. This is sales journal. Purchases journal. Maybe that's why who was asking. Maybe that's why that person was asking. That's why I'm saying that I'm trying to make this thing as interactive, but maybe while talking, I end up mixing things up. Let me see. Because yeah, we're gonna see. That's why these things have got. Just wanna see what Glasgow had bought. These pages. This is a purchase of merchandise. Just wanna see if maybe something that I have to just because now I want to link this to on the 3rd, there is a transaction that is missing. On the 3rd, there is a transaction that is missing. Sold on credit to J. Jason. This is not supposed to be to J. Let me see. Sold on credit to JJC. I just want to see where we were here. 13,000. Sold on credit. Sold on credit to JJC. Just want to track this thing. Maybe that's where the student was asking. So this is just wanna made an EFT to Glasgow to pay their account. So we are paying something that we've bought. Let's see. That is the age. 3,000. Just want to see so that I can refer you to see where did we also had Glasgow. Just want to see. So that's yeah, that's made an EFT to Glasgow to pay their account. So we are paying Glasgow now. Just have to look as to where is that transaction for Glasgow. So we are paying Glasgow. Or is there a typing error in the study material? So we have to pay 3,909. 3,909. So in settlement of their account, which is, and we received a 230 discount. This is the first transaction. Oh, no. Like, students, I see now where does this come from? I was thinking that maybe it comes from the additional information, like in this transaction. That's what we've got here. There are opening balances. That's why I was wondering, where does this Glasgow come from? There is a trial balance that we opened with. You see, there's a trial balance that we opened with of Glasgow. I just want to see, because I just wanted to link these things. See, there is an opening balance that we opened with. Yeah, so here it doesn't say that whether is it Glasgow or who. There is, because I wanted to link you to this, to where is this thing. You see here are trade payables. Because I wanted to show you what are we paying. So it means Glasgow is in this 6,075. That's why I was now worried to say, where is this amount that we are paying? But now I was forgetting that we started with opening balance. So let's start dealing with Glasgow. And then now, so how much? It's therefore, I'm just have to. I want to reduce this thing. So now. Or just one, there's something that is, oh yeah, no, I've managed to reduce it. You see, now, because I wanted more space. So these are the opening balance that are being paid. So, 3,990. The trade payables, okay, let's start with the settlement discount. The settlement discount, we have to split it. The settlement discount. Is 230 times 15 over 115. It's going to be 8. It's going to be output VAT from the settlement discount. And then we're going to have 230. If you've got a question, maybe after this, then you will tell me. 80. So it means, so what is the settlement discount? The settlement discount, just that as customers, normally, I don't know if you do get, if you pay within 30 days, sometimes you get a settlement discount in other shops. So the net of VAT is going to be 200. So let's start. So here is the amount that was paid to Glasgow. Let's go back to this transaction, which was, is it A, the A? So it's 3,990 that was paid. Then we received a discount of 208. So we split that segment discount into VAT and non-VAT. So now the company has to go back, has to account for VAT for a discount. So that the net of VAT is 200. So this is in bracket. So it's a net. Then now it's an output VAT now, because we recognized this previously as an asset, but now it means we are no longer paying it. So we have to, it's an output VAT. So it means it's more like we are paying it over to SARS. So this is this transaction. So how much are we going to reduce our trade payables? We're going to reduce our trade payables with the total of 3,990 plus 230, because you've been given a discount. You see. So we're going to reduce our trade payables with 4, which is 4,220. 4,220. So we're going to reduce our trade payables with 4,220. Sometimes, yeah, they can say, if they say you knew how much was Glasgow owing, if they say you knew that Glasgow was being owed 4,220, they could have said in full settlement. So you'll have to calculate yourself. They could say in full settlement. So it means must know that there is a discount in there. You see. So yeah, so that is that. So if you've got a question, you will pop that question. In fact, earlier on, the reason I was checking, I wanted to refer you to this, to Glasgow, but then it means that it was in the opening balances. Then I have to delete this because then it. So I'm gonna move a little bit faster now, because some of the things are routine now. Like, you keep repeating these things. Even if you don't catch it now, you'll catch on the next transaction. Cash sales. So it's a cash receipt on the 10th. So on the cash, if it's a cash receipt, cash sales of 3,990. Just have cash. I'm not going to calculate these amounts. We've calculated this. So you will calculate, otherwise we won't finish. So it means the money that came to the bank, it's 3,990. How much was the output VAT that they charge? So it's 510. So I've shown calculations. So I won't be showing more calculations, because otherwise you keep repeating the same thing. So just to show us, you see where this amount comes from. So we're gonna say 3,990 minus 510, which is VAT. We're calculating all along, so that you can move 3,400. So the sales are 3,400. Then we move on to the next transaction. Issued a credit note to J. Jason for goods returned that were bought on the 3rd. Just want to see if this what we changed, because there is something that I had to change. Yeah. So if that's what we changed, yeah. So these are goods returned. It's not an overcharge. These are goods returned. So the credit note is for goods returned. Then I'll have to be slow a little bit here. So you go to the journal now, a spreadsheet for goods returned. It's a separate, it usually be a sales return. Issued a credit note to JJ Sins for goods returned. So it means then JJ Sin see. Yeah, Jason had bought. So yeah, on the 12th. So it's gonna be net. So this thing is 115. So obviously, net of VAT is gonna be 100, and VAT is gonna be 15. So it means this is JJC. This will reduce his debts. What are his output VAT? 15. The net of VAT is 100. So I'm not gonna split. If it's 115, 100 rand is for VAT, 15 rand is for net of. It's yeah, 15 rand is for VAT, 100 rand is for net of VAT. So I wouldn't wanna spend time on that so that we can move. Because it's important to be on time. I think by 8 o'clock we will be finished. Then now, through cash to pay. Oh, now, let's have to see. It's through cash to pay weekly wages. So this 940, it's for here below. Through cash to pay weekly wages. So it means if we are paying on the cash payment journal, so it's gonna be cash. How much is it? 940. The clerk normally picks these things from the bank statement. So we have wages. Wages do not have 940. Wages do not have VAT. Then we move on. On the 15th, cash sales. What does it affect? Cash. The moment cash is a spreadsheet for cash receipts or cash payment. So on the 15th, so it's gonna be cash. Again, we will split so that you will see where these amounts come from. VAT, it's gonna be, which is cash receipts. This is 2414. VAT is gonna be 315. And exclusive of VAT. Because I don't want to write numbers. Some students will still say, but when you get these numbers? So VAT is gonna be 315. It's gonna be 3,100. So we are taking 2415. 5. And then output VAT, it's gonna be 315. I've shown, even though it's not detailed calculations. And then sales, it's gonna be 2,100. So these are repetitive. So that's why if you don't catch this, you'll catch on the next transaction. Jason paid money direct into the bank account of the business. So we are receiving, who's Jason? Jason, it's somebody that you owes us. That's why I want to refer. Jason now is paying. It doesn't go to the sales channel. Money received, it goes to the cash receipt. So we write the name of the payee. Jason. Jason. How much did we receive from Jason? We received 5985. 5985. So what was this money for? It was for trade receivables. So we gave him a settlement discount to Jason. 5985. We gave Jason a settlement discount of 345. So I have to split the settlement discount. So you'll do calculations. The VAT, it's on the settlement discount because we won't calculate each and everything on this 345. So that on this 345 settlement discount. So just the VAT is gonna be 45 rand, and exclusive of VAT it's gonna be 300. Then it means then this is gonna be input VAT that we have to. It's an asset because we had already paid SARS a lot of VAT. So now we have to claw back some VAT. So it's gonna be in brackets 45. Settlement discount. It's gonna be 300. With how much are we gonna reduce Jason's debt? We're gonna reduce Jason's debt with 345 plus 5985. So then that means, in fact, in total, we're gonna reduce Jason's debt with 6,330. And also, you must take time once you've reflected. Maybe you won't page each and everything here. Then once you've had time, you can reflect on this whole thing. Once you have at your spare time then. So we've captured day number 15. We are now on day number 18. Sold goods on credit. So we are selling goods now to F Brown. So does this go to cash receipts? No, you didn't receive cash. Cash payment? No, no cash. Sales journal. Does this affect sales journal? Yes, because this is credit sales spreadsheet. So the name of the person is F Brown. F Brown is our data. F Brown is our data. Excuse me. At 4,600. We split that VAT. We've shown how to calculate VAT before, so we won't be doing that every time because otherwise we won't finish. So the net of VAT is gonna be 4,000. Then we move on to day 18. Cash purchases of trading inventory. You see, the moment I say cash, is cash payment on cash receipt. So we're going to cash payment. So on cash payment, we're gonna have cash, but we don't have the name of from whoever we paid for. Cash, cash purchases, cash purchases of 2,750. How much went out on the bank? 2,760. Then we split with the input VAT. How much input VAT? We've calculated input VAT before, so we now know how to calculate it. It's 360. Then what goes to purchases? Yeah, we're buying from Dasco. So this, I put it in the wrong column. This because I say I'm talking and I'm writing. We're buying from Dasco specifically. Here we just bought for cash. 2760. It's 2,400. So, I'm writing and I'm writing and I'm talking. So sometimes I don't write in the correct space, but you've got the proper solution with you. So these were cash purchases. Purchases of gasware on credit. Now we need to see what is the nature of this business. If they buy gasware, so these are gas traders. So this is trading inventory. When they buy on credit, so it means where does that go? it goes on the purchases journal from they bought from Glasgow on credit. So this is the purchases journal. So the name Glasgow Ltd. It's Ltd. So they bought purchase 5750 from Glasgow. So total is 5750. 5750. Then what was the input? So now I'm not going to calculate it again because we've been calculating. Otherwise, we're not going to finish it 750. The purchases, the net is going to be 5,000. And then we are still on the 18th. So now we are moving to the 20th. Now, returned damaged goods. Returned damaged goods on the 20th. Just for now, we are returning goods to Glasgow. So these are now purchases returns. Let's look for purchases returns. These were sales return, purchases returns. So the other goods that were bought from Glasgow, we are now returning it. Or even this, it would be the same, whatever. Maybe whether Glasgow, the same, these are the ones that we've bought. So it means those were purchased on credit, total, it's going to be 575. See, but I didn't shift here so that you can see where we were. But here we were, 575. Return goods to Glasgow, which is 575. Again, the same thing of splitting VAT. 75 Rand is VAT. I'm not going to calculate it again because we've done that quite a few times. Then, yeah. Then we are moving now. This was the 20th. We are moving to the 21st. Through cash to pay wages. It's routine. I think by the time we do the last one, you will know where it goes. It goes to the, we are not receiving, we are paying. So, on 21. So, it's going to be cash payment, cash. So, they went to the ATM so that they could withdraw wages. 989. You see where we are on top there. So, what they withdraw is 989. Then, it's 989. Then, the wages, it's 989. So it doesn't affect anything. It's a routine transaction. We move on to the next one. Received damaged goods by F. Brown. We need to see who's F. Brown. F. Brown is somebody who we sold to. Now he's returning some damaged glasses. So we have to put that on the sales return. We're now on 21. 21, not 23. 21, who's this person who's returning? F. Brown. The goods are 230. So I'm not going to split that again as I have split it before, then 200. Then we move on now on 25. Cash sales. Move on 25. Cash sales, 6,210. Where does cash sales go? They go to the cash receipts journal because it means we received cash. So this is going to be for cash. It's 6210. The amount that affected the bank balance went into bank 210. We sold glasses. Then how much of that goes to VAT? I'm not going to split it again. So it's 810. It's output VAT. Output VAT is for sales. 810. 810. So yeah, output VAT is for sales. Then the net of VAT that will go to sales, it's gonna be 5,400. So you will pass the calculator at your own convenience. So I was just making sure that you follow initial. So we're not gonna split everything. Received an EFT from F Brown. So on the same day, we also received an EFT from F Brown. Again, a reminder now. So F Brown, it means he's paying his debt now. So it's gonna be F Brown. Pays with how much? I just want to see. F Brown 2550 in the bank. Now, do we split VAT? No, we don't split VAT now. We split it before. We've already split it here. So, and accounted for it. So when he pays, be careful of that. Because sometimes you might get those instances where you don't know yet. This is a data. Does it split VAT? No, it doesn't split because it's already split in the initial sale. So it goes like that. So it's a trade receivables. It's a trade receivables, but because then F Brown received a discount of 208. So here is a discount. The discount, here's the discount of F Brown. It's 208 increment discount. So this discount will have to split it into, here I'm doing it here on top so that you can see you can see we've been doing this for quite a while, the split. So it's this 230 is made out of 30 VAT. The SARS will have to claw back. We have to claw back this VAT from SARS now because we ended up F brand didn't pay us, and then exclusive is gonna be 200. So there we have it. It's gonna be settlement discount is gonna be 200. Then it's gonna be the input VAT, which is our assets now, because we are clawing it back from SARS. Because now we've given this F Brown, a discount. So now what we'll end up putting on the trade receivables, his debt will reduce with what he paid plus discount, which is 230. See now I'm there on top, plus 2550, which will give us 230 and 2550, which is going to give us 2780. 780. So the debt of F Brown is going to reduce with 2780. So now these are repetitive. So if you don't follow, you will also because this is recorded, also analyze it at your own convenience. So this was 25. So we are now on 26. Let's deal with 26. Through cash to pay wages. So this is not a receipt, it's a payment. So again, on the 26th, it's cash. So these are repetitive. We've got a column for wages. How much was this cash that we drew at the ATM or at the bank? It's 945. And it was for wages, 945. We've got a column for it. Wages do not have VAT. Made an EFT to pay Telkom a telephone account. It's another payment again. So it's not a general journal. So who's the details of the payee? It's Telkom. Telkom 575. Here is it on top, 575. So the balance, it's in total. Then you'll have to split VAT, because this is a cash payment journal, so it's gonna be an input VAT. How much it means was our input VAT? It was gonna be, it was 75. So the amount is a sundry. We don't have telephone here. It's a sundry. The sundry, it's 500 net of VAT. And then it's telephone. It's telephone. Just something. Telephone expenses. Expenses of 500. Then we move on received an account from PC. You see now it's a bit vague now. Received an account or from printer for printing. So now we have to figure out if we received an account, was it cash? No, it means it's on debt. So if it was, we did it on credit, does it go to the cash payment? No, we didn't pay for it. Does it go to the purchases journal? No, this is stationary. It's a non-routine transaction. So where does it go? Everything goes to the general journal. Again, I've shown you the debit and credit. Assets are debit, credit liabilities, owner's equity. So are we gonna debit this or are we gonna credit? So so it means we will split this 805. So how much is VAT in this net of VAT? So this is printing. The expense is printing, which is 805 minus 105, which gives us 700. Then it's an expense here, so that you see it's an expense. Yeah, then also here below we have VAT input. If we are about to finish now, because we are left with 2 transactions or so. So then if you've got questions, you must put it, and then we will close, and then we will continue next week on Tuesday, but I'll post the details. So if you've got questions, you can be posting them. This is this input VAT, which is an asset. It's good if for your own understanding, this is an asset, so that you know what is what. Then, in fact, the whole debt, how much are we owing Printer Limited? It's trade payables or Printer. If you've got questions, I'll take them at the end, and then we close, because we are not running out of time, but we are about to reach that time. And then the narrations are important as well. This was printing of documents. This is stationary. And yeah, in fact, the trade and other people, the total was 280. So you've got this thing correct in your books. So I just want to hear it so that you can see how where things arrived at. So we've dealt with 805, with the 26. You're on the 27 now. Purchase inventory on credit from Glasgow, 3450. So does it go on the cash payment? No, it's on the purchases journal. So we are purchasing on from Glasgow again. LTD. So what was the total that we purchased for? It's 3450. 3450. That input that was there, so that we don't waste time, it's 450. And then the net exclusive of VAT is gonna be 3,000. If you've got questions, you can be putting them in there in the chat there, but that's if you've got questions. Then now, below here, it's made an EFT to Ferguson of 299. So we are paying Ferguson. Let's see. So made an EFT to Ferguson and received. To see, I think it might be received. Let's see who is Ferguson. These are purchases, so that you can now we will have to received here. Purchase inventory on credit from Glasgow. This is a purchases journal. Then made a direct payment from Ferguson. Just have to look for Ferguson and see where is Ferguson so that we can be able to link that. So that we can be able to link that with Ferguson. Or Ferguson is somebody that we had purchased for. Here is Ferguson. This is Ferguson. So how much did we pay Ferguson? Paid Ferguson by direct payment and received a 299 discount. Let's have to see. Let's see. Maybe whether was this an amount that is already in the so here is Ferguson. So let's see if this paid payables. Let's see where do we get paid Ferguson linked by direct payment and received 200 and that all is 5,476 that we paid to Ferguson. So we paid Ferguson 5,476. So 27. The payee is Ferguson. So it shows that we pay Ferguson. We paid Ferguson 5,476. So the amounts are given. 5,476. And the discount, remember the discount is 299. So if the discount is 299, so it means it means we have to split. So the VAT is going to be 39. Going to be 39 and 39, and then exclusive of VAT. It's going to be, I think it's 260. So here is a discount. Discount received. So it means we received a discount from Ferguson of 260. We received a discount from Ferguson of 260. And we have to account for an output VAT because now we had gotten, it was an asset of 39. So I've written these amounts here. The VAT is 39. The VAT is 39 of this discount, and the exclusive of VAT, it's 260. Then we have to add 299. As you can see, we have to add this discount 299 plus 5476, which is equal to 5775. So that's why I'm adding these amounts separately. So it means the trade payables of Ferguson, we're going to reduce them by 5775. That was for Ferguson. So then I think we are on the last day now. Made an FT to HP Bank to pay owner's house installment. Paid owner's house installment by direct. So now we are paying a bank now. This is a cash payment. So the payee is HP Bank. HP Bank. How much we paid? 2,500. Here it is. So do we have something about Owners Bank? No, we don't have. So let's see. Okay. Oh, so now here it is. Paid. Made an FCC to pay owner's house installment. You see now, there is a separation. Look at the top there between the owner and the bank. Sometimes drawings are direct, where an owner will make a direct drawings, make drawings from the business. Sometimes the business pays its own the owner's installments using or expenses or school fees, kids' school fees, using the business's account. You'll see that they say if you go on auditing, then those are drawings. So those are, it means this person, because he was paying his installment with a business account, he was making a drawing. Remember I said you must separate the business and the owner. These are drawings. 2,500. This must have been the last one or the one before last. Then the last transaction is gonna be Zitens made a direct payment to the bank account to pay his rent. So it means here we are the business is subletting, so we are subletting as well. So rent has VAT. So it means, is it a cash payment? Once that it involves cash, then it's a ZZT. That is details. ZZTs. I wanted to capture. I just wanted to capture this. Yeah, it's ZZTs. How much? It's 920. So it's a bank. The amount that was received. So we received, see, made a direct payment to the bank account of the business. So we received 920. Like I said, later on split VAT again. So because we are subletting, so the VAT related to that. If there are questions, then I'll take questions and then I'll close. Then we'll meet on Tuesday. Then I'll send Even yeah, I'll send the link today together with. I'll send the link today with the what is this thing? It's together with the uh, lecture evaluation. So the VAT there is 120. So we've been calculating VAT for a lot. So I'm not gonna do it because so that we can move. Then this is rental income. Then now, what's left now? This was the last. Maybe let me. This was the last part. This was the last part of the analysis. So what we've done here, remember I said these are cash receipts, cash transactions, cash payments, credit sales, credit purchases, on journal, all other credit purchases. These credit purchases are for inventory. Credit purchases and credit sales are for inventory. Now we've done number one. So now it's a matter of just adding, which I will add. You can add at home, but this thing is already added because this is an existing exercise. 6. So therefore, if there is a question, you can give me a question. If there isn't, then we will close. Then I'll schedule another class for next week, Tuesday, where we will then now to the lectures now. You see, now as I was saying that now you are batching it first before you transfer to the lectures. It becomes a bit tricky. So yeah, I wanted to split it in 2 lectures so that you can digest. So therefore, if you've got a question, then you can ask me. Otherwise, then we can close.
Thanks a lot, Mr. Kanyeza. I think the question was actually based on Glasgow. I think maybe it's because I had a bit of network problems. But I'm not sure if you already covered it. It said it's from Sibusiso. He was saying that Glasgow had an opening balance of 6,075. We paid him 8,855 on the 3rd. Then paid 3,990 on the 8th. So we have a credit balance on our accounts with Glasgow.
So
That's
it
a
means
question.
Glasgow is okay. Let me.
No, he's asking.
Asking. Just wanna see. So just wanna see. No, but Glasgow, it's not. Glasgow, it's not. It's Glasgow. So it means we were owing Glasgow. These are trade payables 6075, and then does he mention 6075? Therefore, does the student mention 6075
Yes, as an opening balance.
as an opening balance? And then he said, how
Yes.
much did so we are owing Glasgow
So,
on purchase?
because we paid him on the 3rd.
Yeah. Paid Glasgow on the 3rd. I just want to see 8,000. And then we paid him again. That's what he's saying. Paid Glasgow. He paid Glasgow. You see? Yes. 87885039. You see, I just want to see. Glasgow 5. No, I don't think Glasgow, we're having a credit balance with Glasgow. But anyway, we are still gonna now add this whole thing, take it to the ledgers. I think that question so that it can be answered with actual calculation. So do we have a credit balance with Glasgow? If we've overpaid Glasgow, we have a credit balance. But then the thing is here, it's not shown on top on the balances as to who is it was. So then once we are not dealing with that now, we will park it. Then we will address it on Tuesday, next week, Tuesday. Yeah. Again, a reminder, we no longer have a class on Thursday tomorrow, and then Wednesday. We'll have classes on Tuesday, next week, Tuesday, Wednesday, and Thursday. Yeah. No, we will address that question when we deal with the actual figure so that we demonstrate, you see, rather than jumping the gun to it. So, yeah, I think that was that the only question, Tshepo? This is a matter of
Yeah, I
adding. So,
think that. And then the other
this
one
is,
was just oh sorry, so continue, sir.
yeah, this is a matter of adding. The rest is a matter of adding. You see, so which I'm not gonna worry about it currently. No, in fact, it's already added already. Yeah, so there's no need for me to add. Yeah, so then remember to complete the what do you call this? To complete the I'll send you the recordings of
Evaluation
this
form.
class evaluation form. You've got this. You've got these all these workings. So I won't send you. I'll send the evaluation form and everything. So I think, therefore, we are ready to close now, aren't we?
Yes, thanks a lot, Mr. Kanyeza, and thanks to my fellow colleagues. Like Mr. Kanyeza said, be on the lookout for announcements for the recordings and additional material. And yeah, we'll see you sometime next week. Thanks a lot, Mr. Kanyeza, and keep warm.
Yeah. Thank you, students. Thanks. Thanks. Bye.